Hello everyone, my name is Dana. We also have David and Harpunit, and we are Group 3, and we are going to be presenting JPMorgan Chase & Co. To outline our presentation, I will be going through the company background, industry analysis, and SWOT analysis. Harpunit will go through some recent news about JPMorgan and Chase, and we will finish off with David going through some of our financials. To begin, JPMorgan Chase & Co. came about from a series of mergers dating back to the 1790s. The first company in its lineage is the Manhattan Company. Back in the 1790s, New York City and its residents lacked a water supply system. Over 60,000 residents lacked clean water, so New York City in 1799 decided to charter the Manhattan Company to lay out the pipes for this water system. The project was given so much capital that they decided to open the Bank of the Manhattan Company later that year. They experienced great success as a financial institution that they later decided to close their operations in water supply and became the central bank for New York City. In 1955 lies the first merger between Bank of the Manhattan Company and Chase National Bank of the City of New York. They combined their services, making them specialized in credit cards, mortgages, and retail financial services, also doubling them in size. 4 decades later, there was another merger between Chemical Bank and Chase Manhattan Bank for nearly the same reasons. Executives both believed that the combination of their services would make them larger and an even bigger competitor to other bankers. So they merged and became the nation's largest bank in terms of assets. In 2000, Chase Manhattan Bank merged with JPMorgan & Co., giving it its name JPMorgan Chase & Co. JPMorgan was a private merchant bank from the 1800s. Its creation was during the industrialization era, making it easier for Europeans to invest in specific industrial projects in America, including the construction of the railroad system. This merger cost Chase Manhattan Bank a huge amount of $30.9 billion in hopes to become a threat in the investment banking industry. Today, JPMorgan is the second most valuable bank and leading global financial service firm. They provide a range of services for all different types of clients, including corporations, individuals, and families. Here we have an industry analysis for the global banking industry. To start, their competition is very high in this industry. Nationally, there are the big 4 banks, including Citibank, Bank of America, Wells Fargo, and JPMorgan Chase. All of these 4 banks offer the same type of service, and there are low switching costs for consumers, so it is easy for a consumer to switch from any of these banks, also including local banks and other national banks. Next, ease of entry in this industry is fairly low. New banks trying to compete on a global level face strict government regulations, high capital requirements, and the trouble of making their bank well known amongst the other banks already in this industry. Threat of substitution in this industry is high as more and more people rely on their online and mobile device for different types of payments. Some people only open one account and use new apps in order to pay for different bills and transfer money from person to person. Lastly, we have supplier power and buyer power, which in this industry are fairly similar because individuals and corporations are the main buyers and suppliers of capital. For suppliers, high net worth individuals and corporations can severely impact banks if they switch to another to make deposits. When deposits are made at this scale, it can significantly alter a bank's balance sheet. Also, there are low switching costs for depositors, so it makes it very important for a bank to try and keep high net worth individuals using their services. When banks need to loan money to high net worth individuals and corporations, it is important because their main source of revenue comes from the interest on loans at this level. No small individual client can impact a bank. However, corporations and high net worth individuals looking for large amounts in loans can alter their revenues. Next, we have JPMorgan Chase & Co.'s SWOT analysis. Some of their strengths include that they're the largest bank in America and one of the top 10 largest banks on a global scale. They have significant brand loyalty and a strong global presence, making it a huge competitor in this industry. They have over $1.2 trillion in assets, making it attractive to businesses on large scales. Some of their weaknesses include they've faced multiple lawsuits and negative publicity in the past decade. Back in 2013, they had lawsuits ranging from their involvement in the Enron issue to also rigging credit card fees. All of these litigations they faced severely damaged their reputation, which is a key factor in this industry, considering there are low switching costs. Some of the opportunities they have are developing economies, mobile and online banking, and better payment systems. Threats include uncertainty of financial crises, which is throughout this entire industry. The only thing banks at this level can do in the case of a financial crisis is to be prepared, because they cannot avoid or pretend like they don't occur. Regulatory changes are another threat, and they have to be flexible in order to quickly adapt to the new changes put in place. Lastly, JPMorgan Chase faces competitors on a national level as well as a global level, specifically the big four banks in America, which are Citibank, Bank of America, and Wells Fargo.
JP Morgan's business segments are categorized under two umbrellas: consumer businesses and wholesale businesses. Consumer and community banking offers services through bank branches, ATMs, online and telephone banking. It offers deposit and investment products and services to customers. Home lending includes mortgage, origination, and servicing activities as well as portfolios consisting of residential mortgage and home equity loans, whereas card, merchant services, and auto issue credit cards to consumers and small businesses. Wholesale businesses. The corporate and investment bank provides services to a global client base of corporations, investors, financial institutions, and other entities. In addition, banking offers a full range of investment banking products and services in all major capital markets. Markets and Investment Services is a global market maker in cash securities and derivative instruments. It also offers sophisticated risk management solutions, prime brokerage, and research. Commercial banking delivers extensive industry knowledge, local expertise, and dedicated service to US and US multinational clients and nonprofit entities with annual revenue generally ranging from $20 million to $2 billion. In addition, it also provides financing to real estate investors and owners. Asset management, however, delivers comprehensive global investment services which include pension analytics, asset liability management, and active risk budgeting strategies. Wealth management also offers investment advice. Recent news. In January 2018, Amazon, Berkshire Hathaway, and JPMorgan Chase announced their partnership, aiming to improve US healthcare for their employees. Through a new independent company, their focus is to provide US employees and their families with simplified and transparent healthcare while reducing costs. There was also change in leadership as JPMorgan Chase appointed Daniel Pinto, the CEO of CIB, and Gordon Smith, who was the CEO of CCB, as co-presidents and co-chief operating officers of the firm. It also committed to 5-year comprehensive investment of $20 billion to develop new branches in new US markets, increase wages and benefits for hourly employees, as well as add new jobs throughout the country, while increasing small business and mortgage lending commitments. Most recently, JP Morgan Chase and remaining Big Four banks have been reaping benefits of huge tax breaks that Trump issued from the beginning of 2018. In quarter 1, JP Morgan saw their tax rates plummet to less than 17%. With the help of Trump's tax cut, the banks now have the incentive to bring their capital. The competitors of JP Morgan include Bank of America, Wells Fargo, and Citibank. Bank of America is the single largest wealth management company worldwide as a result of its 2008 acquisition of Merrill Lynch. It is a lead competitor of JP Morgan due to its size and commercial banking for individuals. Wells Fargo and Company is ranked as the world's largest bank by market capitalization with a total market cap of $255 billion. Citigroup was formed through the $140 billion merger of Citicorp Bank and Travelers Group in 1998, which resulted in the world's largest financial services corporation at the time. Bank of America, Wells Fargo, and Citigroup are all traded on New York Stock Exchange.
Looking at the balance sheet, JPMorgan Chase is huge by any measure. With assets in 2017 of $2.5 trillion, that's trillion with a T, and liabilities of $2.3 trillion. In 2017, net income was $24.4 billion on revenue of $99.6 billion. With 3.5 billion shares outstanding, earnings per share was $6.31. We're concentrating on 3 key financial ratios: return on assets, net interest margin, and the loan to assets ratio. ROA is key because the bank's major assets are loans. JPM's ROA is 0.97%, and while this seems low, it's in line with its competitors, as we'll see in the next slide. The net interest margin is significant because interest is a primary source of income for a bank. JPM's net interest margin is 2.69%. Again, this is consistent with the industry. The loan to assets ratio is important because it measures loans as a percentage of total assets. The higher the ratio, the more reliant the bank is on loans, and the more exposed it may be to interest rate and default risk. JPM's loan to assets ratio is 36.2%. On the next few slides, we'll compare JPMorgan Chase to its 3 major competitors, Bank of America, Wells Fargo, and Citigroup. For return on assets, JPM is second to Wells Fargo and a bit better than Bank of America. Citigroup's ROA is negative due to a tax charge against income in 2017. For net interest margin, JPM is third behind Citigroup and Wells Fargo respectively. And for loan to assets ratio, JPM is second to Citigroup, followed by Bank of America and Wells Fargo. As of Friday, 4/27, JPM was trading at $109.04 a share. Viewed over 5 years, JPM has delivered fairly robust returns, while its competitors haven't fared quite as well. Citigroup stock closed at $68.99 a share on Friday. Bank of America stock has definitely felt the pain of its Countrywide acquisition and has remained largely flat, closing on 4/27 at $30.14 a share. Wells Fargo has been mired in a seemingly unending string of financial scandals. It closed on Friday at $52.44 a share. On behalf of our group, I'd just like to say thanks for watching, and we look forward to the discussion.